We must be live. So, what's up, guys? I hope you have a great Sunday. We're about to. Oh, I forgot my mic. We're about to maybe read some articles, watch some videos together, read some news regarding the stock market, crypto, and see what's up. Check on the headlines on the biggest news sites. And let me adjust my screen. And then we can go ahead and jump into the topic of today's video. So, let me save that. Let's start from CoinDesk today, from Binance and CoinDesk. Let's watch the cryptos. Let's check the cryptos so we see what's up there. Open link in new tab. So the price is 47.5k. Last day, somehow, some way, Bitcoin was sitting around at 45k, 45.8k or something most of the time. ADA was below 120. Ethereum was struggling at 3.8k. But then at the market close, was actually at the day close for the crypto market, we saw Bitcoin started rising. Bitcoin started increasing for one reason or another. And I think every time that it starts increasing again from the lows, it almost feels like it will explode at any time. And I think since the adoption is so high, since so many people are joining the crypto market in general, after a while they will have no choice but to invest in the biggest asset in the crypto market. And I think that's what will happen, and we'll see insane FOMO after a while. Anyway, Bitcoin is at 47.2k, 0.3k right now. Ethereum just a tad below 4k. Binance is at 534. BNB is at 534. 128 for ADA. This week, the last week, and over the last couple of days, even though Bitcoin was at 45k, I didn't buy anymore. Was kind of saving some money to buy the dip as much as I can on the stock market, and that's what I did. I bought a lot of stocks, like a lot of dollars of stocks, man, and that was good. I'm happy with my buys for this week and the positions that I built. Anyway, let's move on. Let's move on, and let me make a quick coffee here. Let's check the headlines on CoinDesk. Usually they are not very interesting, but sometimes you never know. We'll see. Will Bitcoin see end of year rally? Don't know. It will be kind of interesting to see what happens this week. On the market. I think things will start picking up. People will start dismissing, I think, the Omicron fears. After a while, they have to. Like, we have those variant and COVID fears for so long. After a while, they have no choice but to adapt to them and not worry so much about Omicron, or at least I think so, because there are still news that it will lower the GDP of everything, so of every country. So that's That's a bad thing for the future of the stock market and the earnings. But I think things will turn out better than we expect when it comes to earnings. Now, we might see a crash. We haven't seen a crash in a while. The last crash we saw was in 2020, so we might see a crash after a while. And it's perfectly understandable considering how high the market has run up. Anyway, Bank of England to ramp up talks on crypto rules, and data is hard to find. Okay. Polkadot parachains. Okay. Web3 is a return to the internet's wide split. MicroStrategy seller lays out ways firm could generate yield from its massive Bitcoin holdings. That will be interesting. Financial stability warns of stablecoin DeFi risk in annual report. Financial stability. Okay. Bitcoin limited to 55k resistance as momentum slows. DeFi rug bull scams pulled. Okay, whatever. Let's check the topic of this CoinDesk article. Bank of England. The topic of this article is real quick. Bank of England to ramp up talks on crypto rules as data is hard to find. That's a report. Okay, let's see. International cooperation is required to gather the information needed to evaluate crypto risks to the global financial system. The growing number of banks offering crypto trading and custody for clients requires global rules to protect the financial system. Okay, for financial stability, strategy and risk, the newspaper said. Gathering the requisite data is not something the UK can achieve alone, she said. It will need cooperation through the Financial Stability Board, G20 organization that makes recommendations regarding the stability of the global financial system. That crypto holdings in the UK do not currently pose a threat to the financial system. It expressed concern, however, that the pace of the growth means they could become more dangerous as they become increasingly linked. I think if crypto didn't exist at this point, the stock market would have crashed because of all the liquidity that wouldn't go into crypto, some of it would go to gold, and the other of it would go to the stock market. So you could say that we might have seen a crash in the stock market if crypto did not exist, because of how things would shoot up, how much things would shoot up with so much liquidity and money in the economy. Then they'll have to stabilize lower. Anyway, Web3 is the return to the internet's wild spirit. That's the next article here, and it looks kind of big, so we might as well just leave it because we don't have that much time today. That's an interesting one that I will definitely read. We have a video here. We have one. MicroStrategy the CEO of MicroStrategy, lays out ways firm could generate yield from its massive Bitcoin holdings. The CEO discussed several ways the software company could produce income from the 122,500 Bitcoin on its balance sheet. Largely reflects Bitcoin holdings. Okay, those Bitcoin were purchased since the third quarter of last year for roughly 3.7 billion in total. Billion, man, insane. And are now worth 5.8 billion. To generate income from its Bitcoin, MicroStrategy could lend some portion it to a trustworthy counterparty, CEO Michael Saylor said. The company could also put its Bitcoin into some form of partnership with a big tech company or bank. You could think of that as putting a lien on it. MicroStrategy might also look to put a mortgage against its Bitcoin, generating long-term debt under favorable circumstances. Finally, MicroStrategy could develop some kind of interesting application for its Bitcoin, said the CEO. Saylor noted in his presentation that no normal steps had been taken on any of these potential.
Welcome to this special edition of all.
That's a 20-minute video, so we won't watch that now. But in case you want to watch it, you can go to Encoders, you can find the article. Financial Stability Group warns of stablecoins, DeFi risks in annual reports. Okay. I mean, imagine having taken many loans on crypto, on USDT, and then USDT disappears. So you don't have to pay back your loans. The market will crash probably, so that will be a problem. But yeah, this is a big one. So let's see, trading. The reports also suggested DeFi users could face losses for any number of reasons, including price volatility, operational issues, okay, whatever. Potential benefits, well-designed and appropriately regulated. Stablecoins could allow for faster and better payments than current channel support. The transition to broader use of stablecoins as a means of payment could occur rapidly due to network effects or relationships between stablecoins and existing user bases or platform. The report said, the way stablecoins are transferred might also boost the efficiency of payment tools. The report said, still, this section also noticed the potential regulatory concerns around stablecoins, including the need for user confidence in the tool as a means of payment. Okay, financial innovation can offer considerable benefits to consumers and providers of financial services. Nothing interesting here, kind of boring, in my opinion. So let's go. Should we go to Baron? Should we go? Let's check CNBC today for the stories there. They usually have nice videos to play with. Market turbulence may be a theme in the holiday week as investors afraid of Omicron. Okay, don't care about the Omicron variant. Kickstarter, Discord, and others raving about Web3. Their users gave them a reality check. Netherlands orders extreme lockdown until mid-January to rein in a spread of Omicron variants. Disgusting, man. Nothing that interesting here. Let's check this article about Web 3.0. Crowdfunding website Kickstarter wants to move its entire platform over to a new infrastructure based on a blockchain technology. The proposal is all part of a buzzing new movement in tech known as Web3, which aims to create a decentralized version of the internet. Kickstarter and Discord, the online chat app, want to make moves in Web3, but Outcry, I think Microsoft owns Discord, right? Yeah, we are back. I don't know why I disconnected for a while. So, large companies and investors with deep pockets are raving about Web 3.0, but there is a disconnect between how tech and finance industry professionals view crypto and perception of the technology from the general public. With crypto, the primary use case among consumers continues to be speculative trading, and there is still a huge education gap. According to the UK's Financial Conduct Authority, 69% of people under the age of 40 don't realize crypto isn't a regulated product and don't care, in my opinion. Most of them, there is clearly a gold rush, lending to speculative investment. Tom is best for inventing system of untraceable electronic cash in the 1980s called eCash. General skepticism about crypto and digital currency He's existed over as long as I can remember, long for Bitcoin. Chaum said he thinks people distrust of crypto today will ease once the market matures. Several major companies, including Tesla, PayPal, and Meta, have taken the plunge into crypto lately. Such moves have helped drive the price of Bitcoin and other major cryptocurrencies higher this year, with investors betting on their potential to reach mainstream acceptance. But if Kickstarter and Discord's attempts to move into the market show anything, it's that this goal is still a long way from becoming a reality. Okay, whatever. Let's go to Baron, see what's up here. Don't expect big returns from the market next year as interest rates rise. That's a big article. This was a story that I would like to read the other day, but forgot to, but didn't have time to. A Reddit IPO. Users of Wall Street Bets have their doubts. Actually, now that we heard about Wall Street Bets, let's go and check Reddit and Wall Street Bets. It will be funny. Oh, Wall Street. Let's see. It's always funny, actually. It's funny how it's always funny. Come on. Hello, man. Wall Street Bets. Look at that. 11 million members. Wall Street Bets new. Wall Street Bets elite. Let's check this out. Join. How have I not joined this already? Join. Let's see. We should buy Reddit. Not the stock, the actual company. Well, let's see what he says here. If it's not that long, we might actually read it. If we all get together and own 51%, then we will own this entire website. We could make the rules, profit from the advertising, and finally get paid for the memes we make. I have even come up with a list of things we could do as new owners. Reddit mods can apply for paid internships as Reddit. This is much closer to having a real job than what they currently do and will benefit the organization. Your flair is your official title at the company. Instead of CFO, you'll be potato. NSFW posts will receive special protections, and if you happen to work in our new skyscraper, the NSFW posts are automatically considered SFW. Everyone gets a turn in the corporate jet. Elon becomes a mod. He can also apply to become a paid intern. We have a monthly party on our company yacht, the SS Visual Mod. Our corporate cafeteria is a dining hall with fast food restaurants along the side, but they're all Wendy's. The entirety of Reddit will turn into a 24/7 factional battle for or control of Reddit. Meme wars of consequence, alliances with meaning. Yeah. Oh my god, that was funny. Some stories are really funny, and that's why I visit Reddit sometimes. Let's see if they have anything else interesting. And then we told them this trans story. Fuck you, hood. Okay, let's see. $47.98 paid to the order of fuck you, hood. What is that? What did this guy do, man? Why do you only have 4 toes? Margin. Margin usually leaves you legless. Oh my god, man. Jesus Christ. When you go deep into margin. Netflix Scrummer said it's time to buy. Well, boys, look like the market will tank come Monday. Short Reddit after the IPO. There are a lot of talk about Reddit severely restricting or eliminating NSFW content after the IPO to satisfy skittish investors and their religious right. We all know what happened after once mighty Tumblr banned adult content. Their user base evaporated by almost 50% practically overnight, and they are no longer a household name. Even bringing back limited accounts of adult content didn't help them. If Reddit pulls the same stunt, how long so you think that it will take their stock to tumble, and what way will be the best way to capitalize on it? That's an interesting thought, by the way. Reddit was invented by young libertarian types, but has slowly acquiesced to demands of the government and special interest groups. There is a long line of failed social media sites before Reddit came on the scene, and Reddit's technology could be easily replicated. I only see corporate board types and shareholders destroying the formula that makes Reddit special. Thoughts? It worked great for OnlyFans when they tried to ban. I almost forgot that. Because it didn't work great. Anyway, let's move on. What's my notification here? I made a post the other day. Turns out Bitcoin is actually reasonable. Let's see. What is that? Free. Free award to give out. Claim. Nice. Oh, it gives you an award to give to other people. That's interesting. Turns out Bitcoin's price is actually reasonable. Everyone calls out for 100k Bitcoin but won't buy at 50k. Be the bull you want to see in the world. Never stop the DCA. That's what I'm doing actually. I bought 6 figures at 64k. Am I doing this right? I hope so because it stinks. 6 figures, man. If you buy 6 figures at 60k, you got some balls. I bought some at 60k and above, but not much though. Fuck Robinhood for turning off the buy button that said it was going to 1,000, and fuck me for listening to WSB Diamond Hand Moon Boys, GME Tards. January 27, 2021, I got 150 shares, average price was around $13. Insane. We shareholders trying to convince traders to buy their Gabat stock. Let's give it up, guys. Anyway, let's finish with Reddit. Let's go back to Barons and read this story. Members of the Reddit investing community that want a name as formidable market force last winter are bracing for the social media company itself to become a stock. They aren't sure they like the idea. I mean, they have their points, right? Reddit said Wednesday it confidentially filed paperwork for an initial public offering that could happen after the SEC completes a review process, depending on market and other conditions, on Reddit's own site, which was seen as so critical to January's surge in highly assorted stocks. By the way, let's check the prices of the market. Let's see what's up. Ooh, Bitcoin is rising, 47.5k. Let's see. Let's see if it continues on. Depending on market and other conditions. On Reddit's own site, this was seen as too critical to January's surge in highly sorted stocks like GameStop, that some institutional investors began to use third-party data firms to track sentiment there. The user response was mixed. Let's see, many of the top comments on Wall Street Bets, the hub for retail investors who made aggressive option bets on companies such as Hertz, Tesla, and GameStop, joked that Reddit, once public, could look for new ways to make money from users, potentially harming user experience. The company declined to comment beyond its IPO filing. Reddit has more than 50 million active users as of January, but 2021's meme stock explosion could have spurred further growth. I think that's obvious, right? You either die a hero or live long enough to become a public company that will monetize the shit out of us. One user wrote on the forum, which is famous for its crude language, memes, and inside jokes. Others called sites like MySpace and Dig successful social media platforms in their time, which suffered as attempts to cash in misfired. IPOs of other high-profile social media companies, have been mixed, at least at first. Facebook stock, now called FB, dropped 31% in the first year, but the stock is up 800% from the offering price. Snap rose 5.9% and is up 166% from its IPO price. I think these companies that have an ad revenue model have an advantage because as they grow, the ad revenue grows a ton, and it's nice. The stock jumped 55% in year one, but is only up 67% from its 2013 offering. Pinterest, which went public in 2019, fell 8% in its first year, but is up 88% from its offering price. Reddit isn't the first company that was robbed in January's events to consider public offering. Robinhood Markets, Hood, which helped make the possible meme stock frenzy with its commission-free trading app, went public this past summer. The company was widely criticized by Reddit users when it joined other online brokers in limiting trading of certain securities like GameStop stock. Because that's not a free market, man. Citing clearinghouse collateral requirements amid the volatility. Reddit posters joked about shorting the stock around its IPO. That would have been a savvy move. Robinhood, what we read actually. Robinhood shares have fallen 52% from the $38 IPO price. I can burn. In another Wall Street Bets thread discussing whether users plan to buy Reddit, let's see. Stock. The top comment reads, "Have you seen the kinds of things the users say? The platform has at times removed entire communities, including those dedicated to involuntary pornography and harassment." Okay. Others suggested that shorting the stock or betting on a decline via options or Superstonk, a community focused both on GameStop stock and snuffing out conflicts of interest and shadiness in markets. Users who call themselves apes speculated that bad actors could buy enough shares to influence how comments on the site are moderated. Reddit is getting ready for an IPO, one user wrote. "This is bad news for us apes. If institutions get voting control, they can shut down certain subreddits." That's true. And that's sad actually too. Let's check the next story. We have Fed story here. No one cares at this point. Reddit, home to work spread first files go public. We read the story about that already. Let's see what else. Okay, SEC proposes new rules on insider trading, stock buybacks, and more. What to know? Let's see. While the proposed changes won't directly affect most investors, it's important to understand why the issues matter and how to react to the new changes if implemented. Insider trading, the goal. The SEC wants to enhance disclosure requirements of insider trading and protect investors from unfair disadvantages. Why it matters? It matters. Corporate insiders have access to material non-public information about companies. Trading stocks using such knowledge is illegal because it gives insiders an unfair advantage. Under current regulations, insiders can set up predetermined plans to trade company shares, but it's a public disclosure of those plans is not required. Okay, critics say executives could modify. Okay, whatever. What's new? The SEC's newly proposed rule would require corporate insiders to wait 120 days before they can execute a trade after establishing or modifying a plan to purchase or sell shares. Oh my god, that's 4 months, man. Such a cooling off period would more distinctly separate establishing a trading plan from the actual trades. SEC Chairman Gary Gensler says the cool off period will also apply to companies, requiring management to wait 30 days before making trades under a share buyback plan. The new rule would also restrict insiders from instituting overlapping trading plans and limiting the number of single trade plans to one every 12 months. That's interesting. Doesn't sound that bad, actually, first thought. The goal, share buybacks, the goal. The SEC says it wants to enhance the disclosure around share buybacks and help investors determine whether there is any connection between a company stock buyback program and executive compensation. Why it matters? Like dividends, buybacks are a common way for companies to return cash to shareholders. Since buybacks reduce a stock's shares outstanding, they lift the firm's earnings per share and stock prices. Critics say buybacks could allow executives to unfairly benefit themselves, since many have compensation packages partially tied to metrics like earnings per share and stock price. The capital used on buybacks could otherwise be allocated to more productive investments such as worker wages and product developments, critics say. Okay, what's new? From SEC? The new proposal will require companies to provide more timely information on the share repurchases 1 business day after the trade is executed. The current rules require quarterly disclosure of monthly data. So we learn about the monthly data of share buybacks. The proposal would also ask firms to describe the rationale for their buybacks, criteria used to determine repurchase amounts, and any policies relating to corporate insiders trading activities. Give me a minute, boys. Who's calling me again? Money market funds, a goal. SEC wants to reduce the likelihood of panic runs on money market funds during periods of market stress. Okay, we don't care. The falls have begun in China. Which names will survive? I mean, I don't even know any names in China, man, so what's the point? China's bad economic news has a bright side for investors. What's a bright side for investors? Out of the parts of the week that they're getting the most attention from retail sales, the numbers are seen as a proxy for the health of Chinese consumer and sentiment, as the debt troubles of developers like Evergrande roiled the property market. November retail sales increased 4% versus 5% the month before, a figure boosted by seasonal factors. The consensus expectations among analysts was for growth closer to 4.7. To some, that suggests China's consumer isn't bouncing back from the pandemic. The Rex Scissors, a long time, okay, China Watcher. This guy sees a positive element in that Beijing appears to be moving away from its typical practice of smoothing out its data to avoid reporting any sharp downturns. These are the lowest growth figures we have seen except in the heart of a crisis. They are being more honest about the data. Whenever they are willing to be more transparent, it's a positive. Stability, though it is still the focus. Okay, away from focus on just economic growth and is more concerned about metrics like a job creation. By the way, let me send a message for a minute here, and we'll probably close the live stream soon. Stability through is still a focus. The major theme coming out of the annual Central Economic Work Conference, which has out the economic agenda for the next year. What is it saying here? And that could mean Chinese markets get some support, even as geopolitical issues from delistings to investment bonds in the US continue to cloud the outlook for US investors. The iShares MSCI China ETF closed down 2.4% at $62 on Wednesday, marking a loss a bit more than 17% over the past 12 months. So 70% down year to date, basically, on the last year. Though Chinese central bankers have been more restrained at their global have been more restrained than their global counterparts in providing stimulus through the pandemic, the positions could reverse. Just as the Federal Reserve moves to more quickly scale back the bond purchases it has used to keep the economy on track, and signals that rate increases are on the cards. Nothing that interesting, actually. Let's go to check the headlines real quick before we close live for today. Brace for a viral blizzard. Okay, whatever, man. We don't care. Business shopping day. Retail stocks stand to keep gaining. Will the Fed be caught bluff flat? YouTube TV loses Disney channels in spot. Ooh, that's interesting. Tech stocks could struggle in 2022. REITs are poised to outperform. Here are 3 picks. Let's read this story about YouTube. That will be interesting. I'm a big fan of Google stock and YouTube, by the way. YouTube TV is losing ESPN and Disney's other channels. Streaming is becoming just like cable. I think that's obvious that it would happen after a while. Monday Night Football and other key Disney properties are leaving YouTube TV. The change happened so swiftly, YouTube TV subscribers with a full sports packages need to find somewhere else to watch Mondays. I wonder how this will affect the stock on Monday. As of December 17, 2021, end of day Eastern Time, all Disney-owned channels, including ESPN and your local ABC station, are unavailable on YouTube TV. Ooh. Read a post on YouTube TV's website. Even cloud store recordings are leaving YouTube TV. That includes ESPN, ABC, Disney, National Geographic, FX, and other channels. It's a hiccup for YouTube TV, parent Alphabet, albeit a small one. The monthly price for subscribers is dropping by $15 a month, or $180 a year. YouTube TV has an estimated 4 million subscribers. That's $720 million in annual revenue. That's a small price to pay, man. Of course, the content might not. By the way, we don't have that much time left, so we'll close the live stream here, and I'll see you guys on the next one. Hope you enjoyed today's live stream. Like the video, subscribe to the channel,